Are you on? Jeff, are we on? We are almost live.
Okay.
Okay, we're live. Once again, good afternoon and welcome everyone, and apologize for starting the meeting late. This is a special City Commission meeting called by the City Manager pursuant to Section 2.0 of the City Charter to reconsider item C7AA from the December 11th, 2013 City Commission agenda. Today is Friday, December 13th, 2013. Shall we start? Do you want to explain? Or?
Yeah, Mr. Mayor and Commissioners, on Wednesday, and with respect to item C7AA, the Pelican Garage issue where the city had the right by the end of today to exercise a right of first offer with respect to an acquisition of the lease from our lessee on that building for a purchase price of approximately $22.5 million, and the Commission on that day voted to decline exercising the offer based on a report that we had prepared where we indicated an analysis of the project, financial and otherwise, that took as its assumption that this garage would be operated like we operate our other public garages if we were to take control of it. And as you know, that is a $1 an hour rate, at approximately $70 a monthly rate. Obviously, as you know, the city has historically not operated its garages under the premise of making money off them, but rather to provide affordable parking to the residents and the employees and visitors to the beach. And so when we did our analysis, we did it with numbers that were based on those rates. After the end of the meeting, information was presented to us in terms of analysis that said that if the Commission had wanted to exercise a policy decision to acquire the garage but operate it on a commercial basis, as has been going on now pursuant to some of the assumptions that were made, I guess, by the proposed buyer, then you reach a different financial analysis, and we've presented that in this information. And I called this meeting, and again, I apologize for pulling us in on a Friday afternoon, but I thought in a spirit of transparency and not to be accused of, hiding the ball, I wanted to make sure that the Commission was aware that there are scenarios financially based on what rates will be charged and whatnot, where the financial picture is, in fact, a positive one as opposed to a negative one, and the Commission might well want to engage in a different policy decision about pricing for this garage in terms of rates than the other garages. And so I wanted to at least bring it back to you all in case any of you wanted to reconsider the vote and open the discussion of whether or not to exercise that option. And that's why I brought it here, because if I'd let this day pass, there would be no other opportunity.
Well, thank you, Mr. Manager, very much for doing that. And first of all, I'd like to also just thank all my fellow commissioners for on Friday afternoon coming here. And I think this is a great sign that shows the commitment and the responsibility and the proactiveness of this new body and getting onto things and not waiting and not pushing them forward because time is of the essence. And a special thanks to Commissioner Tobin, who really delves into this, reads, finds opportunities, and isn't shy to come out and bring them to us and to the public to make sure that we are always doing the right thing in a total transparent manner. And so thank you, both of you, for doing that. Now with that, Commissioner Tobin, would you like to chat a little about the opportunity and we can discuss it?
Thank you, Mr. Mayor. And I got to give thanks to everyone for coming in also, and especially to the city manager, because when I went to him to sort of try and get a better understanding of this, the manager has a very, very good understanding of finance that I didn't know that he had. And we started to talk, and there were some things that maybe needed a little more exploration. So here we go. Let me try and explain it. And I know I got a finance person or two or three up here, so I'm glad to bring this to the
we got
commission.
The best person in the world to my right.
This is more, it's not as accounting as it is financial analyst, but you're right, she definitely understands numbers, and that's great, and I'm glad that we have Dee Dee here also. What I'm asking for, the city has an opportunity to basically take a free look at this deal. A nice, calm, free look during our right of first refusal, and it doesn't cost us a nickel. So what I'm asking for today is for us to just exercise that free look that won't cost us a nickel so that we can have an opportunity to notice this and get proper public input if the public wants to have input on it. The second thing I would just say before I start is that if we don't buy this deal, the owner of the garage will charge market rent, but they're going to keep the money. If we buy this deal and charge market rent, we have an opportunity to take that money that our residents and visitors are paying and give that money back to them in the form of police protection and parking and infrastructure. So you cannot change, if we pass on this deal, you cannot change the fact that the owner of the property will charge market. You cannot change that if we pass. So if we don't pass and we charge market, at least we have an opportunity when the residents and visitors are taking money out of their pocket and giving it to the garage, at least we'll be able to take that money that the residents and visitors took out of their right pocket and put it back into their left pocket in terms of essential services. All right? So, as you all know, the city is in the business of providing parking in garages, and we've chosen to charge on our garages $1 an hour. This private garage deal was done a little more than 10 years ago, and we gave the ground and we leased it to a parking operator, and they're charging market rent. They have another 36, 37, 38 years left on the lease, and they want to sell it. They want to sell it. Right now, effectively, when all is said and done, and there's some expenses that we pay in terms of settling a lawsuit, right now we get about $73,000 when all is said and done from this garage a year. And the cash flow before debt service to the owner of the property, they get about $1.6 million. On this 36 years of leasehold interest that they're going to sell, and they're going to sell it to a real estate investment trust, Jones Lang LaSalle, what I thought about is, one of the things I thought about it was also that a future commission may or may not decide to recapture this property for the benefit of the public. Typically what happens on these public deals is somebody hires some good lobbyists down the road and they get extensions on these leases. Right now, the city has been smart, and we don't allow these type of long-term sweetheart deals without referendums. But in the past, we did allow them, and we could, we can't assume that this in 36 years is going to come back to us. Typically, what happens on these deals is the owner of the deal will let a lot of deferred maintenance happen on the property, and then they'll come back to the commission and say, hey, I know this, my parking garage is an eyesore and it looks terrible. I'll tell you what, we need $5 million to fix it up. If you want to amortize that $5 million over the course, we need another 10 or a 15 or a 20-year extension. And I never really saw the opportunity for the city to recapture what belongs to us. So in addition, that's sort of an additional periphery consideration that I thought about. In addition, what's interesting is if the city recaptures this property, Jones Lang LaSalle was going to make a tidy sum as a return, and on their pro forma, their costs their costs are real estate taxes. And I know as a public garage, we'll only pay real estate taxes on our retail. We won't pay taxes on our garage. They also pay for liability insurance, which we won't pay for. So there's a lot of different things during our free look period. We can run the numbers and see how much more profitable this deal will be than the deal that the private sector is already willing to pay for. But for sure, it's a better deal for us than it would be for Jones Lang LaSalle. Anyway, I think I've about covered it. Let me see. Oh, we can do the deal two ways. If we do the deal with cash on hand, we've got about $20, $21, $22 million in the parking fund. If we do the deal with money on hand, we'll make $1,775,000 the first year. We'll make $1,398,000 the second year, $1,468,000 the third year, and you can see all these numbers on page 38 of your material. If we decide to finance it, and financing is sort of an interesting thing with government, the financing will come through the enterprise fund. Our enterprise fund has about $100 million of debt that we can do on that parking fund. So I would say that if you wanted to borrow the money out of the parking fund, the $22 million, if we plan on going to Vegas and blowing $78 million in the next year or two, we wouldn't want to borrow the money because we need the money for Vegas. But if we don't decide to blow an additional $78 million on whatever, and seriously though, we've talked about some parking needs in various aspects of the city, including the Zaha Hadid garage. And we're going to need to spend, or want to spend, or may be inclined to spend, depending on the appetite of this commission, some 20, 30, 40, maybe 50, maybe as much as 60 million in the future on parking garages. I don't relish spending that money, but I just wanted to let you know that when we do borrow money, we have a debt capacity. This won't even put a mild dent in our debt capacity, but I just thought it was interesting, and I thought to be complete and informative, I wanted to let you know about debt capacity in our open fund parking enterprise account. I'd also point out to you that these numbers that the administration ran for you on this Argus financial spreadsheet are conservative numbers. They're very conservative with a cost of money of 4.5%, and we also kept in a lot of expenses that the city won't incur. Okay, so anyway, it costs you nothing to take as they say in French, give a look. So that's it. It's a great deal in the private industry. It would be an even better deal for us. And the beauty of it is we're sort of forced into this position, and rather than let the public and visitors' money go out into the wind, we at least get to give them back their money.
Great. Thank you, Commissioner Tobin. So I believe this is kind of, we break it down to a few different areas, and we should probably discuss and debate the few different areas. And of course, Alex, I want to hear from you, and I want to understand. You represent the seller. Okay, terrific. Number one, we need to really talk about, and Commissioner Steinberg comment, and number one is the public policy side of it. Number two, Commissioner Whitehorn, I want to understand we should debate the financeable side of this, and does it make financial sense for the city to own it? And then I think number three, Mr. Manager, and I think we should discuss it, are we using resources here and not providing a major public policy difference where we potentially want to use these resources somewhere else? And so I think it's kind of almost three separate tranches to understand. But Commissioner, okay, a little both, right? Okay, great. Commissioner Steinberg, you had something you'd like to say. So.
Well, thank you, Manager, for bringing this up, and Commissioner Tobin, you made some really great points. I just want to make sure that we're not setting this commission up or future commissions up for a loss. And what I mean by that is what will happen when the local businesses or the local residents come to us and say, hey, we want to buy a monthly pass, a reduced monthly pass. Or what if they come to us and then say, hey, we want a reduced hourly rate? What do we then do? So I just want to make sure we're not setting us up for a loss down the line, because according to the memo, I think it was 14 years to recoup our investment according to market value. Is that correct?
That's what I think. Our value.
Our value, sorry. Okay. So I just want to make sure, if we're confident that no one's going to come in front of this commission or a future commission, that's a long time, I just want to make sure and have that discussion.
That's a great point. In other words, basically saying, now that you own it, I know you want to charge market rates, and I know
right,
but you know what? We really don't like it. You're the government. You should be back to $1 an hour.
Well, I just don't. What if they say we want, you're a municipal lot, you're a garage rather.
Why are you charging? Yeah.
We want the same rights extended. I don't know.
And once again, from a public policy point of view, we may decide if this were to go through, is we're going to charge $1 an hour. And it's okay, because it's not a profit center. We're not in business. This is a public policy. This is to provide parking, and maybe that's a service we just want to provide, Commissioner we don't have to look at the economics as drastically. Commissioner Wilson, did you have something you wanted to say?
My concerns are severalfold. From as far as looking at it as a real estate deal, it's basically a 36-year land lease. It's an automatic 10-year renewal, so you have 36 years left on it. It's not a deal for fee simple absolute. So in buying it, you're going to be paying. You're basically looking at $640,000 a year in rent. And so the question is on top of everything else, it's at the end of it, you don't have anything. And so I think that you have to look at it a little differently, like you're leasing property to enter into a business venture, and in doing so, entering into that business venture, what's your goal? And any business, if you're going to enter into any business, it's to make money. And so we put ourselves in the position of, are we going to aggressively try to squeeze every dollar out of this business that will be the parking garage, or are we, as a government should, providing a service for the cheapest possible rate that we can given the circumstances. And I think it's the latter. I think that's the business we should be in. Government should operate as a business. We should be efficient. We shouldn't spend too much money. But when it comes to our services, they are enterprise funds, but we should be trying to do it as efficiently and as well as we can, but save people money. We shouldn't be putting ourselves in a situation where we've got to, I think, be kind of a cutthroat business entity. I don't think that's a wise thing. I also, that's generally my sense. The one thing I disagreed with is on page 2. It said that at a later time the purchase price would likely go up and it may not be as affordable as at this time. I disagree. I think every year that goes by, it's got less value because you go from 36 years, 35 years, 34 years, there's less years on the lease. It's worth less and less. And so, I mean, it's, to me, I just, that was the only...
Can I ask the city attorney a question? Just want to clarify before we even continue is, do we in fact have this first right of refusal? We have a free look?
We do have a free look, and I have been able to have conversations with Alex Tachmas late last night, and he has given us the opportunity to extend the free look period, or actually the time within which to exercise the right of first refusal for an additional 7 days. So if you all need an additional 7 days to make a decision. But they have been very cooperative.
Right. Right, but my question to you is this, is what is our obligation to close? In the event that we were to say, we were to take our option to move forward, what is our obligation
Then the
to
next
close?
step, and I would ask Alex to step up and
Get someone to do
confirm,
next, yeah.
what I'm saying, but my reading of the land lease and also the documents that pertain to this deal give us the opportunity for a limited period of time within which to negotiate a contract, and then another period of time within which to come up with a deposit, which will be hard, will be a non-refundable deposit after, I believe, 21 days, I'm not sure. And so what Commissioner Tobin is saying is correct.
Okay.
We have a limited period of time within which to do a due diligence and then walk away if we don't feel that it's a good investment.
Right, so we have no liability if we don't close.
Subject to the term that is provided for in the letter of intent, which is, I'm not sure exactly.
Well, once we go hard,
Once, well, I believe at a certain point, we have to put up $1.2 million or $1.7 million.
$750,000.
Got it.
And then there's an additional deposit after that.
Okay, great, terrific. I think it'd be important for us to,
About 60.
unless,
Yeah, no,
Commissioner
I
Whitehorn,
had a page of comments.
okay, do you want him to go first? Would you like, okay. Alex?
Sure, thank you. Alex
Thank you.
Katzmas for the record. Generally, if the city wanted to exercise its right, it would have to meet the terms of the letter of intent that is in front of you. It's already been executed between our client and LaSalle. And then just to give you a quick synopsis of the schedule that Jose was alluding to, you would, if you exercise that right, you'd go right to a letter of intent, which I'm assuming you would execute pretty rapidly on the same terms as what's in front of you here. Then within 10 days of execution of the letter of intent, there would be a deadline for signing a purchase and sale agreement and posting a deposit of $750,000 refundable. Then within 21 days of signing the letter of intent, so I guess 11 days after that, 21 days after signing the letter of intent, that would be your due diligence period, 21 days from signing the letter of intent. If you didn't terminate before the end of that, at the expiration of that, then at that point, you would have to put up another $1.5 million, and then at that point, the full 1.5 plus 750 becomes non-refundable.
Right.
So basically, sign the letter of intent, 10 days to do a purchase and sale agreement, 21 days for the letter of intent to finish your due diligence, and then if you didn't terminate before that, you put up basically $2,250,000.
Alex, when do we go hard? When are we non-refundable?
At 21 days after signing the...
So it's like 31 days? Is it
The LOI.
21 days after signing the LOI.
And the LOI you have to have within,
The LOI we would be doing in the next 2 or 3 business days.
right. Because
Because it would basically just be this.
Just to clarify, you guys have a deal in place.
We've got a letter of intent with LaSalle. We're
Okay.
negotiating the final,
Right.
the final details of a purchase and sale agreement, and
Right.
we'll be signing it very, very soon.
So the city would come
So-
up and just say, we'll option, we'll take our right and move forward and buy it. And from your point of view, you don't care if it's us or if it's LaSalle. Doesn't make a difference. It's just, so that's the deal.
Right, so, but once you're done with due diligence, which is a pretty common
Yeah.
circumstance in other contracts, you're done with your look, you're done with your due diligence, you decide you want to go ahead, that's when your money goes hard, which is $2 million and change. And then just to finish the discussion. Then 15 days after the end of due diligence expiration, you'd be closing all cash.
Alex, when I read it, may I, Mayor?
Sure, please.
When I read it over, you're reading from our right of first refusal?
No, I'm reading from the letter of intent that was signed.
Okay. Well, what controls is our right of first refusal that's in our contract, which is different than, so I would rather not rely on the other side's lawyer for the essential terms and conditions of the deal. I'd rather, so if our attorney needs some more time.
No.
Because when I read the right of first refusal with
You're
Jimmy
talking
yesterday.
past, you're
Let me-
talking past each other.
Hold on one second real
me
quick.
just
Commissioner Tobin, let's let the city
I
attorney
think there
just
was like a
give
45
his
days.
thought. Jose?
You're talking past each other. You're not talking about the same issue.
Okay.
What he's saying is that we would need to stand in the shoes of LaSalle Lang and provide the same terms and conditions as that particular purchaser is providing
Yeah.
the seller.
Yeah,
So-
that's what I heard him to say.
Right.
What I was making a point of is that our contract, our document, our right of first refusal is different than that. And our right of first refusal sets out the terms and conditions of how we exercise our right of first refusal.
Right, and
Okay,
today
that-
is the day to exercise our right of first refusal.
Right, I'm not talking about one scintilla of that document. I'm talking about the essential terms and conditions, which are the time that we have to close, the time that we have to think about it. And I think it was like 60 days.
I hear what Commissioner
It
Tobin
was
is
like
saying.
60 days or 45 days. It was some, from the date that the contract is negotiated, we had another 45 or 50 days. So part of what
Commissioner,
he's saying is correct, and I think part of the document that we have is correct. And,
I hear what Commissioner Tobin, let me just paraphrase if I can. Jose, so basically, which stands? If we decide we're exercising our option, does the terms of our option agreement stand, or do we have to match specifically the letter of intent that Alex is referring to?
We have to match the material terms and conditions of the letter of intent that they have received from their purchaser.
Okay.
I disagree on the timing. I agree on the dollar amounts and so on and so forth, but
So you
I'm
disagree on
not
the timing?
sure, when I read it
Okay.
with the manager yesterday.
Right.
We figured it out in the,
Right.
right around 2-month time period.
Okay.
So the 21 days
Well,
is a
all we
surprise.
can do is we have to rely on what the
Well,
city attorney
if
says.
if the city manager views it differently, then I'd like to hear from him.
But we weren't.
I had not seen the letter of intent, so I had no idea what the terms of the letter of intent were.
Right.
I think if we have to, in 21 days, post a bond, a deposit, I think that's a material term. I agree with that.
Mayor?
In terms of when we close, I'm not sure, but.
Let's see if we even
Hold
get
on.
there. Maybe for
Commissioner
some,
Wolfson?
I'm sorry, I apologize. Maybe for some ideological reason, we don't even get there. Let's, maybe
All
the
right,
path we
got
can
it.
take
All right. So I think we've
logically is to see
I
if
think
we
we've
want to
heard
do it. and
what
then-
our terms are. Now, Commissioner Whitehorn, I think would like to ask some
Yeah.
economic question.
Yeah.
Thank you,
Commissioner
Alex.
Tobin, thank you, because we don't often get a second bite at the apple. So we have a second bite. I looked at this as a risk-reward computation for me, very simple. And we have financial and non-financial risks in this deal. There's no doubt that this deal has risks. And I'm going to list what some of my risks are that I've been having trouble in the last 24 hours getting comfortable with. And I have to tell you that I'm the first one to admit that I am pretty fiscally conservative and cautious, and I'm fairly risk-averse. It's my training. And so there may be others up here that are more willing to do risk than I am, but I will tell you what I considered. And I tried to pull my notes from all over the package and put them in here. The first one is the capital or borrowing capacity, as you call it. Typically, when we bond, it's 30-year bonds. So my very first question was, well, if we're bonding for 30 years, do I have a 30-year asset getting back? Because my land lease is in excess of 30 years, but buildings traditionally have some issues and some significant capital costs somewhere along the line. I asked if we had done an existing conditions survey to see what kind of construction and where the building was, and I told that we do not. And I'm very reticent to borrow 30-year money if I'm not sure I'm going to get my payback in a similar period. So that's my first risk, and it's clearly a risk at this point. Maybe something we can do during due diligence, but I still kind of worry about a parking garage in that location for 30 years when I've been told it's already 12 or 13 years old. That's my first risk. My second risk is my capital or borrowing capacity. If I take this money and program it here, and we all agree that we're getting no additional real public benefit except for maybe a return, what are my future projects? So I went back through old finance agendas and found the following, plus one I've added. We've talked about convention center parking, getting rid of surface lots and building garage. We have the renovation of the 17th Street garage, which during this whole process we all realized has some defects that will, in fact, need to be done relatively soon. If you want to, I'll take you a tour and show you some defects. We know that we have some issues in South Beach continuing, whether it's in the south of Fifth area or in that West Avenue corridor. At some point, we will have to address. We know that we have some Collins corridor issues, in particular in the hotel and condo area, that will need relief. North Beach, we've already programmed and discussed a North Beach garage, which, if we're ever going to revitalize that area, will be a key piece. And I pose that if we are ever going to do true mass transit, we should have a transit hub garage to really encourage people to use mass transit. So I came up and said there are 6 potential projects. $150 million sounds like a lot of money. We already have the Zaha Hadid, which I don't have here because that's programmed. So my concern is that the kinds of price tags we're doing, do we have enough money to go out and really do these kinds of things without using capital capacity? That's risk number 2. Risk number 3, Commissioner Steinberg said, which is our ability to control future pricing. We can't assume market rates for the next 36 years because I don't know about you guys, but I'm not going to be here 36 more years. Some of you will, you're young, but I may not. And so the question is, what will future commissions do to those rates? We have no ability to control that. So that's a risk, and we call that in the accounting world, that's an inherent risk. We can't fix that one. Again, the return I thought was $1.2 million. I don't see $1.6 million until 2018, but maybe I didn't read that correctly. And then my last risk is the real estate tax risk. I'm not sure that we've confirmed that market rates do not kick in real estate taxes. I think we need bond counsel to actually answer that because we have to prove a public benefit. And if we're charging the same rates and providing the same issues, somebody would have to answer that. And I know when to ask a question, I don't always know the answer. So those were my kinds of, I'm going to call them, risk analysis. If you had asked me to take a look at this, I would have listed those risks and tackled them. My problem is, in 24 hours, I just couldn't get past every single one of these risks to do this deal. I'm not saying that I wouldn't ever get there. I'm just pretty risk adverse. So that was my financial analysis on what I call the back of my napkin. I promise if I had more time, I would have done more. And I'll list a whole bunch of other risks. We can't always control the expense structure as well. There's a lot of salary expense and other expenses here. Sometimes we in government don't do it exactly the same. I throw that out there as a minor risk because I think that is something we can control. And so it's a non-inherent controllable risk. So those are my risk analysis for you guys to think about. And I'll let someone else.
Thank you, Commissioner Whitehorn. That was very, very detailed. Thank you very much. And for a back of the napkin, that was a pretty good napkin. Pretty terrific. Any other commissioners would like to speak on this? Commissioner Tobin?
No, I really was happy to have Commissioner Grieco here, and I wasn't sure if he came in, if he had a chance to, were you here when I was?
Commissioner Grieco?
I had my wife had the phone to the television as I drove over here, so
okay.
I was trying to listen, and I didn't catch everything that Commissioner Tobin was discussing at the
You want
beginning.
to give him a
Just a brief
bullet
one?
point?
Please.
Yeah.
Sure.
What I said was, it looks like we have a free look at this deal. The way Alex Tatchmas puts it, it's 21 days plus a couple of days for them to figure out their purchase and sale agreement. When I took a quick look at the right of first refusal in our lease, it says we got to match terms and conditions on their purchase and sale, but that we have a certain amount of time, and I thought it was 45 days. But the most important is that we have that time, we can advertise it and let the public weigh in, which I thought was always good from a transparency standpoint. But the way this deal works is if we don't buy this garage, if we don't buy it, if we say, hey, we're taking a pass, the Jones Lang LaSalle, the REIT that's buying it, is going to charge market rent there. They're not doing this for charity. They're charging market rent. So the question to us is, if I want to buy the deal, if we as the city want to buy the deal, what's basically happening, and the way I illustrated, I don't know where my money went, but no.
Always check me.
The way I sort of illustrated it is right now our visitors and residents are coming out of pocket to pay the money on that garage. But what's happening to that money is it's going to a third party. So as long as I know that that third party is going to charge market, which they are going to charge, I thought that if we buy the deal, and it's a very good deal, I ran it on a pro forma, I had 2 or 3 financial analysts analyze the deal very, very, very conservatively. when a visitor or resident pays their money now for that garage, we're going to be able to put that money back in their left pocket for essential government services, like police, fire, more parking, infrastructure, things like that. So since we're already in the parking business anyway, I think there's going to be some economies of scale in the costs and expenditures. For one thing, I thought that we would save on real estate taxes, since we traditionally don't pay real estate taxes on our city buildings. And I also looked at, if we do the deal for cash, if you look on page 38, it says the total return after forfeited revenue with no debt service. The first year was $1,075,000. The second year was $1,398,000 that we make. The third year was $1,468,000, and so on and so on. So in addition to, we're putting $1,075,000 back in the pocket of the public, $1,300,000 back in the pocket of the public, and so on and so forth. And to address Commissioner Whitehorn's concerns, when you talk about the infrastructure, typically during the due diligence period, we would take a look at the structure. With parking garages, you got to look at spalling, and you got to look at the elevators. After the year 2000, typically these garages don't mix their concrete with salt water, and you don't have as much spalling problems, but depending on the deferred maintenance in the garage, you may not. The elevators are certainly a component, but in any event, that's what would happen during the due diligence period. We'd see the physical plant and see how it was. I had some notes on her comments, which I can't find, but in any event.
Let me let the commissioner.
Oh, wait,
Commissioner
May I ask?
Wolfson, you wanted to speak?
No, my question is, I'm looking at the debt service, and it's saying that the debt service is $261,000 in year one. Is that
Where?
the estimation?
Where are you looking?
Page 38.
Okay.
Cash flow after debt service.
Okay.
On page,
That's the what? Say it again?
Cash flow.
That's the cash.
Flow after. You have to, the debt
Where's the
service
debt
is a lie
service?
before.
It's where?
1 million, I have to put my glasses on.
It's
Borrow the money
1.3
and
million
there's
is the
debt
debt service?
Yes,
On a yearly basis?
yes.
And you're basically including the
that's based on 4.5% borrowing costs.
4.5% borrowing cost, principal and interest repayment on,
Right. Well, that's amortizing it over the 30 years, at a 4.5%.
Now, I
borrowing.
did ask. I asked somebody who was involved in parking about this deal, and his first question was, do you get fee simple absolute or is it a lease? I said a lease, and he said 10 million. That's what it's worth. I said fee simple absolute. He said probably about 20. So I mean, it just
Like the greatest financial minds in the country have analyzed this deal, and they had offers anywhere from 19 million to 23 million because of the value of just the leasehold interest. So every big boy on the block all
It
over the
is.
country made offers on this deal.
no, I know, and for it's perhaps
And they're conservative
it's
because they're
different.
REITs.
It's different if you can charge
Market.
straight up market
Okay.
market rates, and if I.
Mr. Mayor and Commissioners, just to, because I want to make sure we're focusing on the number. If you look at page 38, and page 38 is what you would call the best-case scenario, current market rates with escalation. We've been focusing on the bottom line, which is your total return after debt service and after forfeited revenues. By that, we mean debt service is clear, that's your amortization. Forfeited revenues is you're losing the $250,000 payment, you're losing any real estate taxes we would be getting our share, you're losing the ground lease base rent income and percentage rent income. Obviously, on that, you do pay the KTKL payment, which is reflected in there. So the number we keep focusing on is, for example, in year one, total return after debt service and forfeited revenue is a negative close to $300,000. And then obviously that changes over time, and that number gets bigger. When it's our rates, it's smaller when it's their rates.
Right.
But that's the number
Mr.
that
Manager-
we use for purposes of the net present value.
Is this based on market rates?
This first one is market rates.
Right, so we don't even, obviously, the fact is, because I believe that this entire decision, either economically or not economically, I mean, we could buy it, not buy it, it's a business deal. But I think it's a bigger issue, and I think what Commissioner Whitehorn said is it's kind of more of a public policy. This is a public policy discussion.
If you really think that there's
Yeah.
value in reducing
Right.
the rate, we can
Right.
always buy it and reduce the rate. It's just not going to make a good business deal.
Right.
Same as all of our parking garages don't
Yeah,
make good
but we
business.
do it because-
So we have an option. We can do
Right.
this and have a good business deal, or we could do it and have
But
a...
okay, wait. Let me ask you a question because maybe I'm not understanding. You're saying buy it, reduce the rates.
No, I don't want to reduce the rate.
No, but you're saying buy
I
it.
think $3 an hour is very fair.
So you would- you're-
Because our policy, our parking rate policy is, we have decided that people won't pay $1.75 in the meters if they can go park in a garage for $1. Because for me, if I got a spot in front in a meter, I park in the meter. but we have divined through our government psychologists that people are going to go park in the garage instead of parking up front for $1 instead of $1.75.
I think, first of all, I think that the most important thing is it's an opportunity, and thank you to Commissioner Tobin, who came out there and researched it, came up with it, and has brought it to everyone's attention to make us understand that here is a policy/economic opportunity, and that we wouldn't be here if Commissioner Tobin hadn't spent his time to do this. And I think it comes down to as a policy. Alex, would you like to?
Yeah, Mr. Mayor, I just wanted to make a comment about the time frame.
Okay.
We agree with the city attorney that the city needs to meet the terms of the letter of intent that has already been executed and is in the package. So, and understand the timing is very critical to us, because if the city takes an inordinate amount of time, our buyer will walk. And then we'll be left without any buyer for the garage, which is obviously the worst case scenario for us. So it's our position that from letter of intent, it's 21 days for due diligence, and then if $2 million plus becomes non-refundable, then a 15-day close. So the notion of bringing this to public hearings and resident comment, I don't think, frankly, we have time for that, because the commission meeting is January 19th.
We're going to say, let me, Mr. Manager, is there a recommendation from you and staff on what you feel and your analysis of this? As far as
the way we've looked at it, even with these new numbers, is we've always thought that there needs to be a clear public purpose to an acquisition like this. We're not expanding any parking because that garage exists, and we're not creating economic development because that economic development exists. So the benefit here, and Commissioner Tobin is correct, is $20 million net present value. I think I would outweigh that with the concerns I think Commissioner Weinhorn has raised, which is, are we going to lose capacity in terms of our bonding for other garages? But again, this is a departure from previous policy, so it really is a call. We can we'll do our best job running a commercial garage and do a good job with it and bring that money to the residents, but, that is a change in policy that would require a change in ordinance. It has been inconsistent with what we've done in the past. I'm not sure it's my place to tell you that's where you all need to go. That's what you all need to decide vis-a-vis your residents, how you want to approach that, I think.
Got it. But Commissioner Tobin has come to us with a great, from almost like an economic opportunity.
Well, I just think it's more than that. It's really, I appreciate that. And whatever, as long as I thought it was a little quick, the discussion, and we didn't have enough data, so I'm glad that we're discussing it.
Right.
And the public purpose, I would argue, is we're going to retain the money that our residents and visitors are going to be giving to a third party. So if you find value in, it really also illustrates how much money we leave on the table in all the garages in the tens of millions of dollars. But we've sort of off the cuff superficially decided that was good, and that if we charged $3 an hour, people wouldn't come here. But if we charge $1 an hour, people do come here. But also it's a matter of expectations. I wouldn't change the rates on any of the other garages because people already have an expectation of $1. But on the lot where the private industry is charging $3, we could keep it $3, and the public they probably wouldn't know this, but guess what? They're paying market, but they're really getting their money back. So I thought, wow, what a great way of letting the public keep their money.
Terrific. Mr. Mayor, Mr. Manager, I'm sorry, I'm Mr. Mayor, that's me, I forgot it.
I tried that, didn't work.
I know. Do we have a public discussion on that? Do we ask anybody who's here?
You are the presiding officer, you can recognize.
Does anybody have anything to say specifically about this that's here?
Mr. Mayor, before...
Except for the gentleman with the khaki suit? No.
Mr. Mayor, Mr. Mayor, can I just 30 seconds?
Yes, absolutely.
Alex, I just want you to know that the only reason why I keep making this public comment is I know that we have a commission meeting in 30 days, and I just think as a matter of form, I don't think any of us would want to do anything without letting the public know. We certainly have the financial wherewithal to close a deal like this. We would certainly want to look at the structural facility, but in terms of making you wait forever because we're deciding about clay tennis courts or hard courts, I don't think that's happening up here anymore.
No.
So if we decide to close and we decide to go forward, you're not waiting forever, but you would have to wait until January 15th, and you're never going to close before January 15th with your other buyer.
I don't, respectfully, I don't.
Well, your purchase and sale agreement, whatever you say, it's not done yet.
Commissioner Tobin, Commissioner Weinberg, did you want to, before we invite public comment?
My first set of comments were purely financial because I put my financial hat, but now I'm going to take a non-financial comment. This is a huge public policy. departure, because we've never built a garage that wasn't for the benefit of residents. And this garage, if you look at the details, is primarily used by valet and by visitors. And so we have to make a decision, and there's two public policy decisions here today. One is, do we want to use the parking fund balance, which is what we have, right? It's fund balance there. Do we want to use that, not necessarily for the benefit of our residents? Number two is, do we want to be in the market rate business? I don't know that I'm comfortable making that decision today with a handful of people in the room, because they're big departures from what we've done. So, forget about my financial risk, because I'm risk adverse. Those were two questions. I just said I can't answer them. I'm moving on. I think you've all thought about them, but we've all danced around the public policy perspective. We haven't talked about the fact that we've never used these dollars for we've all said, well, we're not going to need anything additional. But in addition to not being additional, this garage is not particularly used for the most part by the public.
Thank you. Let's Mr. Del Vecchio.
Frank Del Vecchio, 301 Ocean Drive. So we have city land that the city advertised for the construction of a garage, and a garage was constructed. And the entity that controls the lease has a buyer of that lease who's prepared to pay a good price. And the city manager mentioned that in the financials that have been submitted, even though the first year would show a loss, the net return on investment for 34 years would escalate, and in the 34th year of that lease would have a net of $4.5 million to the private lessee. Now, what are the risks? Well, one risk is the city forgoes an opportunity to put itself in the shoes of a private investor. Thank goodness that we at least included in the initial lease an opportunity for the city to come back 10 years later and decide whether or not it wanted to take on the lease. My inclination with this city commission and this manager would be to take risks like this. Now, the risk is investing in a 10-year-old garage that may require repairs over the next 30 years. Unfortunately, no one has done that analysis. Can that be done within a few days before your January 15th meeting? Another risk is some commission might decide that even though people, valets, and individuals who park in the private garage are going to be paying from $20 to $25 a day and more, that a future commission might arbitrarily, for public policy reasons, subsidize this. Maybe we can protect against that and make it clear that this is a special case. So I think both Commissioners Steinberg and Whitehorn pointed out these risks. I think these are public policy questions. I think if you have a few days, you could pin down the real parameters of the risk. And if this commission has a mind to charge the rates that the private operator is going to charge for 35 more years, I think you can consider taking a risk and getting into the parking garage business directly. So if you have time, I think you should do it. And I think you've got a team here. I've never seen the likes of this team before that could really pin this down in the way that the private prospective lessee is willing to take this risk. Thank you.
Thank you, Mr. Del Vecchio. Anybody else have comments? I mean, when I look at it and I think about it and I look at the opportunity, I believe that if we were to exercise the option, and we were to exercise the option, we're exercising an option based on the fact that we're going to go forward, not exercising the option because we're not going forward. I believe that you'd want to do it from a public policy point of view, and you have to realize that we're going to charge $1 an hour, because that's what we do. That's who we are. We're not in the parking garage business. So, and I appreciate and I believe that, and I think that that's a great business, and I think Commissioner Tobin has recognized that opportunity. But I think we have to look at it, in my opinion, and I want everyone to talk about it, as if we are going into it based on it will be $1 an hour, because we're buying it to give a huge benefit to the community, not to maintain the same rate. Because the objective of the parking program, I believe, is to get more parking for people, make it reasonable, get them to spend money and enjoy Miami Beach. That's the big issue that you always hear. So to buy it and charge the same rate, for me, I feel is a challenge. To me, if we're going to buy it and exercise an option, better have it perform based on $1 an hour. Because no matter what's going to happen, that's where it's going to go. Okay? That's where it's going to go. It'll go that way faster than anybody thinks. So I think that if the commissioners feel that it's worthwhile to exercise an option, to buy it, and we're going to operate it at $1 an hour, and we know what the subsidization loss is going to be, but we look at it from a public policy point of view and say, no problem, we want to do it, then that's what the decision. Commissioner Wolfson.
I agree with you. I think that if you go into it, you have to go into it that way, because if you go into it the other way, that you're going to treat it like a business or like a market rate parking, you got to be ready that when Memorial Day weekend comes around, you're going to charge people $50 a day. And I don't think that's going to fly with the city. We'll immediately get people coming to us saying, you guys are charging $50 a day, for parking, and this is ridiculous. How could the city do that? But to pay this sum for the garage, the only way to make it work is to be ready to be an aggressive business person. And we're just not, those are not the shoes. So the mayor's, I agree with the mayor wholeheartedly. If you're going to do this, you got to be ready that you're going to run a loss, and you're going to do it for the best interest of the residents or the visitors to keep the prices down, to suppress the prices.
Thank you. Commissioner Steinberg.
I'd like to hear from the parking director, please, as to what our loss would actually be yearly if we did do that. I'm just curious.
Great.
Can I just quickly, while he's getting ready? May I?
Sure, Commissioner Tobin.
I don't think we really and truly have the appetite to charge $1 an hour, because right now we have an opportunity to buy the garage and charge $1 an hour, and it's a financial loss. Every garage that we own that we charge $1 an hour is a financial loss.
Yeah, I agree.
Only this one you got to look it right in the face. The other ones, the money that you're losing every year, which now we know what it is, we're all prepared to blow that cash and lose it. When we have to actually look what we do in the face and spend the money, we all go, holy cow, what the hell are we doing?
No, Commissioner Tobin.
So we really have to think twice, because buying this garage and charging $1 an hour is what we do. So if you turn this deal down, what you're saying is we don't like what we do, because you do it everywhere and lose money everywhere. So you have to really consider this policy.
I think you're 100% correct. I think you're right. I think we lose money, I'm sure, in these garages $1 an hour. Yeah. So the question is, in our scope of where we want to go with parking, sometimes, opportunities present themselves, and under other timing scenarios, you'd want to move forward with them. And sometimes, because your timing isn't right and it's not a priority, sometimes you have to give up good deals. Sometimes you take good deals. That's what life is about. It's knowing when to swing and knowing when not to. So the question comes down to is this one, and I agree with everything you said, Commissioner Tobin, you're 100% on target. Is this one, based on our policy, where we're going with parking, that we need or want to take a swing on this one? So,
Thank
Mr.
you.
Francis.
Saul Francis, Parking Director. Thank you for the opportunity. To answer Commissioner Steinberg's question, if you look at page 64 in your package, and by the way, we have not had an opportunity to really vet the numbers of the existing operator, so we'd have to go through that process, but approximately around $1 million a year with our existing rate structure, which is $1 an hour.
Wait, that's what we'll lose, you're saying?
Yeah. From what the current operator, from the existing operator is
Holy moly.
That's what we're doing all over this.
Well, yeah, but it's just, I'm sorry to interrupt you, Mr. Francis, just to say, to Commissioner Tobin's point, if we look at the price we pay per parking space, and we pro forma out the other garages, what I'd be interesting to know is how does this differ as far as a loss if you were to pro forma? You know what I'm saying?
Use Zaha Hadid.
Well, you use a mix, just in general, like I thought, you know, you're,
No, but I think, Saul, on this
And-
one, we have this is a garage of 328 spaces. I think we ran the numbers that paying $22.5 million is about $68,000 a space. That is putting Zaha Hadid garage aside. What typically, when we build our other garages, Saul, what have we built them at per space?
35, 40?
35,
35, 40.
Yeah.
Yeah.
So it is a different analysis. Those,
Zaha Hadid was about 60?
It's about 68.
So Zaha Hadid is about 68, and this is about 68.
It's about 70 approximately. yes.
So it's in the same range?
It's in the same range.
So it's not crazy,
No.
not a crazy price, right? Okay. So how do you, from a public policy point of view, is this an area that we would want dollar an hour parking? Is this on the?
I know, I mean, Saul, I think the mayor's asking whether or not this area where this garage is located, is it in need of more parking? Is it?
Certainly, that entertainment district could always use additional parking. They're landlocked, it's a historic district as well, so the opportunities to be able to build parking there are limited. So there is certainly a demand for parking. In fact, we're going through the process with Walker Parking to do a demand analysis for South Beach. They're currently in that process, so we should have that analysis back probably within the next 30, 40 days or so. We'll have some hard numbers to be able to at least look there to what the demand is.
Right.
But just anecdotally, yes, there is a high demand for parking in that area.
Okay, okay. So, Mr. Manager, I mean, anyone have any other comments? Anybody here?
I wouldn't buy it. If we were going to charge $1 an hour, I'd rather spend the money and build another garage because I want to increase my stock. I don't put a lot of value in.
Okay.
People are going to come here for $1, but they're not going to come here for $3. And I already know they come here for $3 because I already know I got a garage that charges $3 and $25 on special events, and they make money. So I wouldn't buy it to reduce the rate because it's already being, I'd rather spend the money building more parking.
Got it. So, good point. So can I just ask one quick question? Just going down the line, how many of the commissioners here, just in general, if we were to ever move forward with this, from a public policy point of view, would feel that we should or would end up being at $1 an hour? Commissioner Steinberg, do you believe that?
I'm sorry, can you repeat that?
Do you believe that if we were to buy this garage, that we'd end up being at $1 an hour down the road, somehow, some way, some?
I do think that
It would
if
end up
we end
that
up
way.
buying this garage, we would end up eventually, and this is just what I
Just
think,
yeah, okay.
operating at a loss possibly, which
But-
would be the $1 an
Dollar.
hour, correct?
Commissioner Wilson?
I would agree $1 an hour.
Commissioner Whitehorn?
I agree that's a significant rate.
Commissioner Grieco?
I'm the same. I've been going through all the
Okay,
68,
so-
69, 70, yeah.
So I think what we're saying, and Commissioner Tobin, I think what we're saying is the spirit up here is that we'd all want to be at $1 an hour. So knowing that it's $1 an hour, do you still feel that it's something that we should?
No, I don't. I don't think, no, I'd rather increase parking stock. And I
Okay.
agree with you. I can't imagine that commissions in the future would have the same fortitude. I mean, I'm hopeful, I'm hopeful that the people that sit here after us would have the
Okay.
sense to do the right thing, but I guess you can't guarantee they
let's-
would, so.
Great. So let's, what do we do now? Do we move this?
Well, no,
to-
I think
to-
because this
mean-
was before you for possible reconsideration, if no one moves to reconsider, the item stands, right, Mr. Attorney?
Correct.
Well, let me just first say, once again, Commissioner Tobin, his diligence and his steadfastness and his ability and to go after, and all I can say is, thank God we have Commissioner Tobin, because I hope to God that you do this more and more, because this is the kind of things that's most important for us, to not overlook details and look at things and bring them to everyone's attention. Because this one we may not reconsider, but I can assure you down the road, there's going to be many things that Commissioner Tobin and other commissioners bring to us that we will reconsider.
Yeah.
So,
No, I
hats off and
listen,
thank
I
you.
appreciate having a different jury.
Hats
I know that.
Hats off and thank you
I know
to
that this
Commissioner
jury,
Tobin.
I know you understood the jury
Great.
instructions.
Terrific.
And, I'm happy with the verdict. I left it
So
all on the table.
We'll adjourn this meeting?
Thank you, Ed.
Adjourn this meeting. Thank you.
Okay.
Thanks, Ed.
Thank you. No, listen, it's not sorry. Your policy.
They were
perfect.
Dr. Whitehorn's in the building. I got one for him.
Yeah, perfect. And I gotta get down to 5:30. Gotta go work? Ed, thank you. No, but Ed, you were great. You were terrific because you brought it to everyone's attention.